Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone is doing great. Kicking off this morning. We've got not a lot going on the economic calendar. Let's kind of start things off over there. If you take a look at our economic calendar for Tuesday, pretty quiet. You might say, but Rog, what about CB consumer confidence? Absolutely. At the end of the clearing period, which is the first 30 minutes after the bell rings, a lot of melee, just executing, filling orders. Clearing period is quite literal. They're clearing out those trades. So once that's done, once that particular activity is done, it's usually around 10 o'clock, and boom, we've got the CB consumer confidence number. In the scope of what's today, hot zones, high impact, high volatility, scheduled events, yeah, CB consumer confidence is up there at the top. However, when you take a look at the rest of the week, right, we have a little bit of a lull tomorrow with core durable goods, but really the two big economic events to watch, the two big hot zones on the calendar are advanced GDP on Thursday, and probably the most important thing this week, the PCE on Friday. And you might think, but Rog, what about earnings? I'll tell you what, I really usually don't pay that much attention to earnings. And I know that might sound like heresy during earnings season, but remember, gang, in terms of understanding what earnings are going to do, it's going to be a volatility event for that stock. It's going to be a volatility event for that sector and ultimately that index. And any of you who've been following my work for any period of time know the way we want to look at what's happening in quote unquote the market, right, is start at the top. And even if you want to go to the very tippy top, the ocean, if you will, the macroeconomic rate of change, what's happening with jobs, what's happening with inflation, what's happening with growth. Why do we care about those three things? Because Jerome Powell and company do, right? All right, the next thing that we want to look at is the index, S&P, NASDAQ, Dow, meh on the Russell. No offense to Russell fans out there, but it's not a high concentration weighted sector. It's not really indicative of what's happening in the most important sectors and stocks in the markets that we trade. All right, so we go from the macro to index, then we go to sector, because there's about 3 sectors in each one of the major indices that's going to have the biggest influence over what that index is doing. So for example, NASDAQ, XLK, XLC, XLY, right? For example, the S&P, XLK, XLF, XLV. So we go from macro, the ocean, to the tides, right? Tides are the index, tides are the sector, there's collections of stock. All right, the last thing that I teach is get to the stock last, right? So if you've been following what we do at the Sector Secrets Mastery, if you've been following what I've been doing here for any number of years, you know we start with the top, macroeconomic, rate of change, right? Not headline chasing, rate of change, jobs, inflation, growth, index, sector, stocks, ocean, tides, boat, right? So that's where we are. Now, where do earnings fit in? They really don't in those top echelons, not really. They're very much the tail wagging the dog. An individual stock can have an outsized price movement, and that price movement then goes up, right? Affects the sector, affects the index. That's not the natural way of things, but it is during earnings season. So we keep that in mind, and we remember the tail can wag the dog. And how do we know what those tails are? High concentration weighting in the indices and in those sectors. That's the season we're in, and it's rather irksome, to be frank. I don't particularly like earnings season. I do love the ramp up, though. So if you haven't yet, head on over to countdowntrader.com. It's real easy to find. Just go to countdowntrader.com, and what you'll get is, I believe it's the second update. I love that Trish has posted this again over here at the site, because the 642 earnings window down there, that's the way in which I look at earnings. That's the view, that's the approach. It's what's worked for many, many, many years. And a lot of us who've been in the market for decades have had to adjust to the chaos now, the spectacle that is earnings. because earnings wasn't always phone calls and websites and all this coverage. It used to be just an envelope sent to you in the mail once a quarter. Some of you might remember that, right? Modern markets are very different in the way that they disseminate information. And it's now become very different in the way that the S&P, the NASDAQ, the Dow, the sectors of stocks absorb all that. All right, so that is where we are. Let's get into the questions, and a shout out to the good folks over in our Simpler Trading Room. Major shout out over there. We've got the Simpler Facebook, YouTube, Twitter. So hello to everyone. If you have any questions, go ahead and type it on in. First come, first serve. Ann mentions appreciate the weekly watch list. Oh, right. Yes. Thank you, Ann. If you haven't logged in to the Simpler website, and I based a lot of the weekly watch list on This Week in the Market, which is one of our two premium newsletters here at Simpler. And if you want to take a look at the way that I prepare for the week, every week, it's really done sometime between Friday and Saturday, but it's a matter of taking in all the different ideas during the week. I actually have a little notebook, so it's actually not little. So I have this notebook, and I'm constantly writing things I observe, things I see, little things that I might see tweeted, and I'm writing these things down. And then we want to go ahead and dig into, well, is there any traction there? So I'm always writing and taking notes. And then if you want to see how that then organizes my thoughts and my approach to the coming week, check out This Week in the Market. And by the way, if you want to know a little bit more about that process, a little bit more transparency, this Thursday at 4 p.m., I'm going to be walking you all through that process. What am I doing? What am I looking at? And why, right? So we'll be doing that this Thursday at 4. Super stoked. Thanks, Ann. I appreciate that. Okay, so next up, what do we have here? Let's jump on into the 3 places I look the most for clarity. And actually, we're at one of them right now, and that's the S&P. Right now, the S&P, let me give you all a really easy, a lot of folks say, Rog, what's an easy way to understand sort of the morning, the AM session move? Because we have the AM session. It's going to take us from 9:30 to about 11:30 Eastern, right? And then we have the midday doldrums. We really want to be very careful and frankly, as day traders, avoid that. Then I come back personally from about 1:35 to 3:05. We'll take a look at that window of time. I don't like the last hour of the day, quite frankly. And so that's the way I'll usually look at what's going on. One of the easiest ways to get an AM read is to look at where the current price is. That's right here in relation to the previous session close, which is up here, right? And if we're below the close, I call that the line in the sand. If we're below that, I have a general bearishness about that particular symbol. So a little bearishness on the euro this morning. All right, next I want to take a peek, type in the symbol, take a peek at the euro. The euro is the best way to understand what's going on in the dollar. The overall trend in the euro is up. Don't let a couple down days throw you off the scent. This is a weak dollar environment. This is a strong euro environment. This is about the hawkishness out of the ECB and frankly, the not dovishness, but we are expecting it, right? This is the tail end of the tightening cycle from the FOMC. We're at the tail end of that. So we've got another 1/4 point hike, maybe 2 coming up. And then we move on to a couple months of hold, probably June, July. And then come September, November, Fed fund futures, the target rate probability is expecting a Fed pivot. Whether we get it or not, that's all about, I'm not going to predict. I'm not gazing into my crystal ball. Don't have one. I do have a lacrosse ball. That's about it, right? So if we take a look at what we are expecting, we as in generally the market is expecting, we are looking for a Fed pivot the second half of this year. That's going to keep the euro moving higher versus the US dollar. The last place I'm going to look is bonds. So the S&P, the euro, and bonds. Bonds are moving higher. That means yields are moving lower, gang. Bonds are moving higher. Yields are moving lower. And it's not just the ZB that I would look at. I would also take a look at the ZT. That's the 30-year, and then we're just going to shrink it on down to the 2-year. 2-year yields are moving lower as well. So the movement higher on ZB, the movement higher on TLT, the movement higher on the 2-year, the ZT futures, that is lower yield. All right, that's what we've got to kick off the morning. So let's jump on in, as always, the best part of our show. That is your question. All right, so let's see what we've got here. Sergio says, did I get a new webcam? I probably just stumbled into some good lighting, Sergio. But thank you. I appreciate that. No, I appreciate that. Thank you. All right. Yeah, and that is a reference to Clueless, those of you that are Clueless fans. All right. Jay asks, all right, let's see, dramatic cup of coffee. And of the Snoopy mug. Gotta love some Snoopy here. All right. GC, and oh, that's really good. GC and CL. All right, so let's take a look at gold. If you're on the TradingView platform, oops, how did I do that? That is not what I meant to do. There we go. If you're on the TradingView platform, hotkeys. All right, there we go. Remember that if you're trying to pull up a /GC or a /CL, the way you would on Thinkorswim, on TOS, on TradingView, for those of you that are getting your C legs there, it's GC, the number 1 exclamation point. That's going to bring you your continuous contract. All right, GC. I'm a buyer. In fact, I believe today's update on Countdown Trader is going to be about what I feel is a fairly imminent setup on gold and or, if you want to play, silver. Quite bullish on both, and I want to take advantage of movement lower into our daily price movement ranges. So you can see here, what we're looking for is something that looks like that, right? That's what we're looking for, moves like that into the, as we call it, the DPMR. So gold on bullish, Jay on weakness into support, preferably that volatility-based support, the DPMR. All right, crude oil. Let's go jump on over there. I am bullish crude, but there's been something that's sort of in our way, and it's been in our way for a bit. And let's do this. I'm going to squeeze in this year. So I've got 2023. So what I've done is I've slid 2023 into view. This gives me right here, you can see all this histogram coming out of the side of this. So a histogram that moves vertically instead of the histogram that moves horizontally. I'm looking at price-based volume, not time-based volume or date-based volume. If you take a look at the year, one of the things that's been lingering overhead and giving crude oil bits of trouble is the 200 exponential moving average, or as I like to call it, the equator, right? Bullish hemisphere versus bearish hemisphere. We're in a lot of chop. We're sitting right now on the 2023 point of control. All right, Technobabble, what is that? That's the most amount of volume at a specific price. Now, I don't care about how much volume happened on a Tuesday or at 2 o'clock in the morning. I'm more interested in how much volume happened at a price level, and that's where volume profile, that's where an anchored volume weighted average price, that's where my V score will help say, okay, what's the size associated with that price level, not what date or time volume happened. Very different approach to volume. And one I think if you adopt, you will find it gives you X-ray vision really into what's happening. Point of control, I'd like to be a buyer. I know we're still just below the equator, if you will. But for the most part, as long as OPEC compliance for the production cuts are in place, and as long as OPEC continues to push the narrative of production cuts, think of OPEC like the central bank, and their currency is crude oil. As long as that's the case, what is OPEC doing? What is buying support for us in light of OPEC's action? They are reducing supply, right? That's what they're doing. And that's why that's generally going to be bullish. If we can add crude oil strength to more of an optimistic economic environment, we're not there yet. But I'd rather see any market powered higher by demand, not by a lack of supply. It will generally do the same thing to price, but demand is going to be giving us much better follow through as opposed to curtailing supply. All right. So, Jay, that's what I'm looking for. I'd like to be long both, right? But I actually like gold and, frankly, silver a whole lot more. Since I'm mentioning silver, let's jump on over there. So, silver is SI, and then the alternative is SLV. And it's the same conversation, right? So let's go through the process. If I'm bullish silver, it's because down in here, I've got that market trend, or as we like to also call it, structure. And I know that structure dictates strategy, right? So depending on what the actual mood of this market is, it's in an uptrend, great. I know that not only do I want to be a buyer, I can only be a buyer. And ideally, it's going to be off levels like the Darvis support, which is this automated support level right in here. You can download the Darvis 2.0, by the way, gang, right from countdowntrader.com. So if you want to grab that, throw it on Thinkorswim. It's available. We've made it available for free for many, many, many years. And if you want to check that out, head on over to countdowntrader.com. While you're there, by the way, gang, while you're there, make sure you sign up. You're just going to get emails from me about content and things that are on the calendar, different events and so forth. But if you scroll just past the sign up, and by the way, you can see the updates on the website as well. But if you go just down a little bit lower, you'll see free downloads. And if you're on TradingView, all you need to do is search the indicators for simpler, and you'll find the free versions that we've made available since, I don't know, 2016, 2017, feels like forever. Keep those on the chart. And then for those of you that just took our DPMR masterclass, throw that DPMR on there. Look at the way that Darvis works the DPMR. Look at the way that Darvis and DPMR work with our overall bullish bias, right? That's what we want to do. And then we're above the 200. What's not to like about that? If you can determine if you want to be a buyer or a seller first, don't worry about what the indicators and secret squiggles are doing first. Determine, do I want to be a buyer or seller? Then go about breaking down the chart for lines and levels. You'll find your probability gets far better when you focus on direction first, then that more granular, what indicator am I going to use? What level am I going to get in at kind of thing. So keep that in mind. Mr. Options Trader asks, what is the link? Countdowntrader.com. Countdowntrader.com. All right. Okay. Next up is, do any of these indicators work on interactive brokers? Well, here's the workaround, Mark. So we have quite a few folks on interactive brokers, and while I won't say it's toss or nothing, I'm a big fan of TradingView. So if you've never checked out TradingView, Mark, this is the fix. I don't know what code they use on interactive brokers. I don't even know how realistic it is to put my tools or any of the simpler tools for that matter on that platform. But what I do know is TradingView is broker agnostic, right? So if you look at the very bottom, and I don't think you can see that in this view. So let me move this up. If you look at the very bottom of my TradingView platform, just bear with me here. Okay, now you can see it over to the left. See this right here? I've got my TradingView hooked up to TradeStation, right? And if you go to TradingView, you'll find they've got a huge number of brokers that they work with. So that means you can take, I believe Interactive Brokers is one of them, Tradeovate, Tradier, Interactive Brokers, TradeStation, obviously. There's a number of brokers they work with. And then if you log in to TradingView, using your IBKR username and password, you can use the data feed and power these charts and then use the indicators available here. Because, and frankly, I know there's a lot of platforms out there, and it's just a matter of being able to accurately and really thoughtfully and thoroughly support the platform. And I know for me, I can support 2, maybe 3 platforms. It used to be TradeStation, Thinkorswim, and TradingView. And now that TradeStation's working with TradingView, we can really streamline that. And I use TradeStation for some of my trading, but I use TradeStation. I log into TradingView. So I hope that helps. But no, I personally don't, and I don't believe we have any of the indicators on IBKR. I don't know there's even plans for that, to be quite frank. All right. So, gang, as always, thank you so much for joining me for Charts and Coffee. Hope everyone has a great day. Heads up, active economic calendar this week, mostly with earnings. And then Thursday, Friday, we've got GDP and PCE. All right, gang, I'll see you tomorrow, same time, same station. My futures folks, my sector secrets mastery folks, will kick off our morning of day trading in just a moment. I'll see you in the chat rooms.